Palantir has just received a significant price target revision that investors should definitely pay attention to. The financial services firm Piper Sandler has begun officially covering Palantir stock and has given it an optimistic outlook. The firm issued an overweight rating, which means it believes the stock will outperform average returns, and it set a price target of $170. While the stock is currently trading at what many would consider a rich valuation, the analyst emphasized that Palantir possesses a rare combination of growth potential and the ability to generate strong profit margins. According to Piper Sandler, this technology company is well positioned to reach a revenue run rate of $24 billion by the year 2032. The firm's projections are based on Palantir's growing presence in two massive markets, both estimated at around $1 trillion in value. These include the government sector and the commercial sector within the United States. Given Palantir's increasing role in both areas, the firm is urging investors to remain patient and consider buying the stock when prices dip. Piper Sandler sees Palantir as a frontrunner in the ongoing artificial intelligence transformation. Looking at the broader trend, Palantir Technologies has quickly become one of the top early winners in the artificial intelligence sector. This winning streak appears to be far from over. Demand for the company's artificial intelligence software platform has surged as governments and commercial businesses seek out ways to use advanced technology to gain a competitive edge. This platform, which is capable of analyzing and managing vast amounts of data, is helping clients make better, faster, and more informed decisions. As a direct result, both government and commercial revenue streams for Palantir have been growing at a strong double-digit pace each and every quarter. There is a good reason to believe that this growth is not slowing down anytime soon. Many of Palantir's customers are only just beginning to explore the use of artificial intelligence in their operations. Because artificial intelligence is still in its early stages for most organizations, there is a long runway for future expansion. Analysts who study market trends are also predicting a major boom in this area. The global artificial intelligence market, which is already worth billions of dollars, is expected to grow rapidly and could surpass $2 trillion within a few years. This kind of market growth supports the idea that companies like Palantir, which are deeply involved in artificial intelligence, may benefit significantly. Investor excitement has been building around this idea, and that excitement has had a massive effect on Palantir stock. Over the past 3 years, shares of Palantir have increased by 1,300%. That kind of rise has drawn attention from both retail and institutional investors alike. With another major catalyst coming up soon, some investors are now wondering if the next big move upward is just around the corner. They want to know whether now is the right time to jump in. Before addressing that question, it helps to look back at Palantir's journey and how it gained so much attention in recent years. But the recent artificial intelligence wave has allowed the company to expand into the commercial space. As more companies explore how to use artificial intelligence in their day-to-day operations, they are turning to Palantir's tools to make sense of their data and implement real-time solutions. What exactly does Palantir's technology do? The company provides software that helps clients organize and make use of their data, even when that data is messy or difficult to access. 2 years ago, Palantir rolled out its artificial intelligence platform, also known as AIP. This platform uses artificial intelligence to extract insights and offer recommendations. For example, United Airlines used AIP to go through over 10 years of maintenance data. From that information, the airline developed a predictive maintenance system that helps reduce delays and avoid costly repairs. Another example is the Cleveland Clinic, which is using AIP to improve how patients are assigned to hospital rooms and to enhance overall efficiency. AIP also supports national defense with features that can help commanders evaluate different battlefield scenarios and anticipate possible outcomes. These capabilities are not just impressive from a technical standpoint, they are also having a noticeable impact on the company's financial performance. In its most recent quarterly report, Palantir announced that its commercial revenue in the United States had increased by 71%. At the same time, revenue from government contracts within the United States rose by 45%. These strong results led Palantir to increase its full-year forecasts for revenue, adjusted earnings from operations, and adjusted free cash flow. Chief Executive Officer Alex Karp described the current situation as a stampede toward artificial intelligence, noting that this rush has been a major factor in driving up demand for Palantir's products and services. This brings us to a key date for investors to watch. On August 4th, Palantir is scheduled to report its earnings for the second quarter. Given the company's recent strength in both revenue and earnings, this upcoming report could play a major role in determining where the stock goes next. Historical data offers some insight here. Looking back at the past 6 earnings reports, Palantir's stock has consistently performed well in the 2-month period following each report. If that pattern holds, there is a real chance that the stock could could rise again in the weeks following this next announcement. This would obviously be good news for investors who already own shares, but it also raises the question of whether now is a good time to buy in. First, while historical patterns can provide helpful context, they are not always accurate indicators of what will happen next. Stocks do not always follow past trends, and surprises can and do happen. This means that investors should not buy shares in Palantir with the expectation of quick profits based only on past performance. Second, even if the stock does not climb immediately after the earnings report, that short-term movement will have little impact on the long-term investment picture. Investors who plan to hold the stock for many years do not need to worry about catching the perfect entry point. So is Palantir a smart buy right now? The answer depends on your investment strategy. If you are a value investor looking for low-priced stocks with high intrinsic value, Palantir may not be the best fit due to its high valuation. Similarly, investors who prefer to avoid volatility might want to stay cautious or consider a smaller position in the company. However, for those who are focused on growth and are comfortable with short-term price swings, Palantir offers a compelling opportunity. The company is well positioned in the fast-growing artificial intelligence market, and its early success suggests there may be much more room to run. Whether or not the stock surges after August 4th, Palantir continues to look like a strong long-term play for growth-focused investors. Essentially, Palantir recently received a $170 price target from Piper Sandler, which also rated the stock as likely to outperform due to its unique growth potential and expanding profit margins. The firm believes Palantir could reach a revenue run rate of $24 billion by the year 2032 through gains in the government and commercial sectors, each valued at around $1 trillion. As an early leader in artificial intelligence, Palantir has seen rapid demand for its software, with United States commercial revenue up 71% and United States government revenue up 45% in the most recent quarter. The company's artificial intelligence platform is helping clients like United Airlines and the Cleveland Clinic apply artificial intelligence to improve operations, and upcoming second quarter earnings on August 4th could act as a catalyst for further stock gains. However, while Palantir's stock has risen 1,300% over the past 3 years, investors should be cautious about chasing short-term gains, as the long-term potential remains more important than any single report. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.